there's a lot of negativity around, Trump and the issues in the States. It's not real. There's, since 2000, for example, there's been an astonishing 650% growth in the number of climate action frameworks. There is no slowing down. If I talk about the virtuous cycle of the socioeconomic impact of the AMC, I've provided the liquidity through a different tool back to those projects, but I've also given investors the greatest ability of growth. It is super exciting. We couldn't have done it without Gen 2, and we certainly couldn't have done it without Orpheus Capital. They've been extraordinary.
This is the Assetizer Podcast.
Hi, everybody, and welcome. My name is Tom Lyons, and this is the Assetizer Podcast. And today I'm extremely happy to have with us Professor Lisa Wilson, who is a world-renowned academic in the field of climate science, and as we're about to find out on this podcast, also a practitioner in the field of climate finance. Welcome to the show.
Thanks, Tom. Really great to be here and certainly part of the Assetizer Podcast and to talk to your audience.
Great. So as is customary on these shows, let's start talking a bit about you and your background. You've had a kind of a varied one, as far as I can tell, and I like the sort of academic practitioner side to it.
Oh, look, absolutely. It's a long career and a very varied career. And I think I said to you in the preparation for this that often many years ago I would have been called a generalist, but now I'm actually called a specialist. And it's become very valuable to have these skills. I started my career way back when, obviously I am Australian, but my professorship is actually from South Africa. And I'm very proud in the fact that it is industry-based, not PhD-based. So I've worked heavily in industry and connected, I suppose, that the attributes of the rigor of academia and what it delivers in terms of credibility with the outcomes that have been desired and needed by industry, various tranches of industry. And of course, I've worked very heavily with mining and resources and heavy construction, equally as much in the health and medical side, and probably everything in between. But the common threads of my career, and I often talk about these, it's almost like the golden threads that have sort of pulled everything together, are technology. And not so much the development of technology, but the use of technologies and innovative technologies in ecosystems to enable process within business. And certainly education, therefore, is very strong because whenever you have innovation, you also have to educate. And that's certainly very profound in this climate space that I'm working in now. I do have an absolute passion for the blockchain technologies and digital assets and that area of work, not so much in terms of cryptocurrencies, but the uses of these technologies to enable trust and confidence for business and how they can be more efficient. And so technology and education are key things, key golden threads, if you like, in my career. I've worked internationally for many, many years. I'm often given the most difficult problems to solve. So I am called what's called an ecosystem thinker, and that's where this whole generalist conversation comes to the fore as being valuable, that if you look at an ecosystem, you've got to know how all the component parts work and fit together. And if you're going to innovate, you have to innovate an entire ecosystem, not part of it. So that's sort of a bit of a nutshell of my very long career. Too long to remember in many ways.
I really love to talk to you really quick. You'll have to forgive me about this, a little bit about the blockchain before we go further, because I was heavily involved in the blockchain world from 2017 until I joined Gen 2 in 2023. And like you, I was always much more a blockchain person than a crypto person. And I did a lot of work. I was at Consensus for a while. I worked with the European Commission team, and I did a lot of work on use cases for blockchain technology in supply chain, in healthcare, also a bit in climate. I've lost the thread a little bit the last year or two. So where are we with applications for blockchain in the climate world?
It's probably, actually, I'll back it up and I'll go, that's really why I entered the climate space.
Mm-hmm.
People say,
oh, really?
Well, how did you get into this space? To be fair, I mean, I've been playing around in this space sort of since about 2012, 2013. So sort of well over a decade.
An OG.
Yeah, I'm an old girl. and in the space, and sort of considered number 8 to 10 in the world in this sector. And again, it isn't just about crypto assets, although it is a very important part, because that certainly democratized some of the developing nations in terms of access to finance and
Yes.
new forms of revenue generation and so forth. So I see it as a very inclusive technology. I think we've actually moved way past that sort of innovation curve now into adoption. And it is without a doubt the technology that is providing and delivering transparency, trust, and confidence into these new, I'm going to say, economies, and they're macro and micro economies, where there's new asset classes, there's new inclusions of countries, there's a lack of understanding, there's a lack of trust, a lot of misinformation. These technologies, blockchain technology, is the foundation of the climate world. And how I got into it is that I actually got really tired and probably burnt out in trying to, like many of us that were in the space, trying to educate governments and business on the benefits of this technology, because their minds only went to the crypto space. They just couldn't separate the crypto from the technology and how this technology could be used. So to be fair, a couple of years ago, after, I think if I ever worked with another university that wanted to use my services for free, I decided, and then still not deliver on anything, I decided I'm going to walk away from all that. I'm actually just going to go out and show the world what this technology can do. And so that's really how I went from sort of working with other industries and working in this climate space, because it was so important, where I could build new financial tools, but included in that is this whole ecosystem and I almost call it like a fabric of trust. It's the trust layer. In fact, in our flow diagrams for the structured financial product, the AMC, I call it the trust layer, and it is blockchain. Everything is built on this foundation, and it is one of the most profound technologies for efficiency and trust and transparency that exists. And I just don't think there's been enough work done to demonstrate that, and that's really why I got into this space. So
Fascinating. So, but are there any, mid-scale or large-scale projects, blockchain-based projects out there that are really in production now in the climate space?
Yeah, look, I would say that I wouldn't call them a blockchain-based project. I would say that they're blockchain-enabled, and that really comes from the DMVR, the digital measurement, verification, and reporting of data, and the anchoring of attributes, whether it be of the carbon assets that are being produced or the data that's been used to produce those assets, or auditing trails and all of those sorts of things, and even the custodian of the assets. So I would say, in terms of the work that we're doing, that without blockchain, any climate project will struggle to deliver confidence and trust on the investment side. And that's really, so I would say the very vast majority of projects are now looking to the technologies to be the fabric that delivers that trust layer. So I would say they're all blockchain enabled. You always have the challenge that, of course, the least developed countries and the emerging nations in the global south are still struggling with the cost of these technologies. But the more we scale and the more we use them, I think, the costs are sort of lowering with scalability. But I think also the big blockchain companies, Hedera, for example, and some of the big chains that are out there are providing their fabric for all the other technologies, the AI-driven, IoT, sensor-driven technologies to attach to. So I see it more like a fabric and an enabling tool rather than a blockchain-based tool, because they're still climate-based and they're still methodology-based, but they need these technologies to enable the trust for the DMVR process.
Right, because you need trust in the data, you need trust in the counterparties, you need trust in the verifiability of everything. So that gives you that on the blockchain. So with that in mind, why don't we turn towards the main reason why you're here today, which is this AMC that you've just brought to market in conjunction with Orpheus Capital, and also Gen 2 had a bit of a part in it. Can you tell us a bit about that, what it is, what the goals are, and why you find it so exciting?
Look, I can. It's been 2 years in the making, and it certainly has
Wow.
brought those golden threads. It certainly has brought those golden threads together, the technology and the education, and I would say that the education part has been 90% of the journey. It is an actively managed certificate on investment-grade carbon assets, and predominantly the sole reason that I have developed this tool is to drive capital from the institutional capital markets that's locked, because there are no financial tools that de-risk their mandates and allow them to invest into climate. Now, ultimately, I know that money needs to be moved from traditional capital markets into climate projects and programs, and the work that we need to decarbonise and hit our net zero strategies. But there hasn't been enough work done to shift and eliminate the obstructions that, whether they're perceived or real obstructions, for the institutional capital markets and professional investors to invest into this space. And so the purpose for this AMC is to unlock that. And I think there's always been a profound comment in the back of my mind that's driven this. And it was at COP28 in Dubai, and Kristalina Georgieva, who's the head of the IMF, made a statement that we need trillions of dollars to flow unobstructed from capital markets if we are to deliver on both our sustainability goals and, of course, climate goals, to address the impacts, the drastic impacts of climate change. The word unobstructed was for me the key word. The obvious is we know we need trillions of dollars. In fact, I've just come back from the Blue Economy Finance Forum in Monaco, and if we have any estimation of the need, it's for SDG 14, which is the SDG around life under the ocean, so the ocean component of climate change. We need $175 billion a year between now and 2020 and 2030 just to address our minimum targets. And at the moment, we're sitting at about 5 to 10 billion. So the volume of money is a no-brainer, but there's still no tools, and there's still no tools that are available until we've delivered this, which is a world first, which makes me super excited, because now there are no obstructions. It's a fully regulated, traditional, really, structured financial product that allows institutional capital and professional investors to invest into climate but not be exposed to project risk. And it's about the growth of the asset. It's not about purchasing the asset. It's about the growth of these assets in this new asset class. So it is super exciting. We couldn't have done it without Gen 2, and we certainly couldn't have done it without Orpheus Capital. They've been extraordinary. We've taken them on a really big journey. There's been many conversations where we just about pulled our hair out and gone, oh, this has been so tough. And so, I've had to refine messaging. I've had to explain. I've had to educate. I've had to take the directors of our segregated portfolio company, on a journey of understanding what de-risking means, how this space works, and so forth. So, Gen 2's been challenged by us as well, and we've pushed back really hard because we've said, well, some of your processes don't work for this new market either. But it, for the first time, is a tool that means capital can genuinely flow without obstruction. So it is pretty exciting. We released it publicly at the Blue Economy Finance Forum in Monaco and got amazing reviews. And out of that, of course, we're about to produce a second one, which will be specifically focused on blue. So we've done the right thing. It's been certainly a clear message that a tool was required for various things, and we can talk more about that as the podcast goes along.
Yes, I definitely want to unpack all of that stuff, but I'm actually curious. You say this is a world first, and I understand that it is. It just makes me think, why so long? Like, what was you're unobstructed maybe up from now. What were the obstructions before we get into how you solve the problem?
Yeah, look, often we're asked, it's such a simple tool, really. Why hasn't it been done before? But, I would say, well, sometimes it's the most obvious. The tool itself has been there. So actively managed certificates aren't a new tool.
No, but by no means.
No. But they are really useful for these new asset classes and these new commodity classes. Obviously, because there's cost reductions, we can get them to market quicker, all of those sorts of things. The real challenge was a fragmented market that we were using in. So I haven't just had to develop the tool, the financial tool, and get all the regulation components done and the strategy done and, custodians and paying agents and all of those sorts of things. But we've actually had to go out to the market to partner with and find solutions to difficulties in the market. And it's easy if you give an example.
Yeah.
Let's just say that, I have an investor that comes in with 500 million USD, and we have to go out and we have to curate those assets, those carbon assets, from a myriad of projects, verified projects, with all different attributes that we require. Let's just put aside the attributes for a minute and just talk the process. To attain those assets, we might have to go out to 30 to 40 different projects that have their assets that have been produced and are sitting on registries. Could be 20, 30 different registries around the world. We'll have 14 to 15 different financial jurisdictions. We'll have projects that are coming from least developed nations that have what are perceived to be high risk, such as Africa and India and Asia and so forth. And what people don't realise is how these assets are produced and some of the attributes. So as an asset carbon credit is produced, it's native to a registry where the methodology that's been used to produce it has attached a registry. So if I go out and I want to buy $500 million worth of assets, I've probably got, as I said, could be 15 different registries, different jurisdictions. It's almost like I'm saying, can you give me a shoebox full of receipts? And in that shoebox is my asset class of carbon credits. Some of them are digitized, some of them not. Some of them were not in years gone by, but many of them are now digitized, of course. But what happens is when those assets are bought, they then become orphaned from the registry. So they've got to go somewhere. So where do I put those assets as an investment for somebody to invest into? Now, entities like our paying agent, they're very used to having gold because they can see gold go from one vault to another vault, and they're all regulated and they're secure and they're happy with that because they can see the custody of the gold. But how do I give the paying agent and the custodians and the directors of our segregated portfolio company, how do I give them 15 shoeboxes and go, well, actually, this is what I've got? So we had to find a solution to that, and that, of course, is our digital custodian, which is SECDEX. Now, again, these new digital custodians are unknown to the traditional world of the Swiss paying agents and all the regulated components, because they go, I don't know about that one. I don't know who they do and I don't know what they do, and they're not really, not tested in the market, and there's uncertainty. So, it took us nearly 9 months to get a paying agent to agree to use a new digital custodian for an asset class. And it's the only way we could have a single counterparty. And of course, the only way that we could find a home for these investment grade assets to sit. They have to sit digitally somewhere, and they can never leave that space. So the AMC is one thing. Finding the parties to be able to enable what we need to do was the second part. And of course, we've had to engage with ratings agencies and data agencies as well, such as MSCI and Bloomberg and S&P and all of those. So the actual tool itself is, I'm not going to say the easy part, because we've had to make sure we jump through every hoop for Swiss compliance, but making sure we've provided this infrastructure that I use, source to sale, provenance and trust, and this trust layer, that's been the tough part and the education part. So getting that developed. And of course, at the same time, as we know, and we'll probably talk about that more as we go through the podcast, is the fact that we've also had challenges around the carbon markets and some of the mistrust and all the things that have gone wrong, I suppose, that have been highlighted by the guardians and so forth of the world.
Yes, I definitely want to get into that. But since you were talking about the custodian and some of the parties, maybe you can take us through the other parties who were involved. I know Orpheus Capital was involved. We were involved. You have the paying agent and the custodian. Custodian we already talked about. Maybe we can get a sense of everybody who's in it, and then we can talk a bit more about how it works.
Absolutely. So Orpheus Capital Limited, which has been Andrew and Emil from Orpheus, have been they're the issuer through our segregated portfolio company, which is Calliope. And that is managed and directed by the Guernsey Financial Services Authority. So it's a regulated entity as well. Shire Capital, which is actually out of South Africa, is our strategy and our product manager. So they will look after all the distribution and the management of the actual product. And again, a regulated entity. So every single counterparty to the transaction are a financially services licensed regulated entity. Our strategy advisor is Carbon Capital Corporation, which is an authorised representative and an Australian financial services licensed entity, and they will provide advice not only to the strategy but also around the curation of the carbon assets and the procurement of the carbon assets. Our paying agent is Incor Bank AG in Switzerland. Our custodian and broker for our bankable assets, which of course is our short-term money funds and the liquidity component of the AMC Swissquote. And our digital custodian is SECDEX, digital custodian, headed up by, which is a part of the GMEX group, which is headed up by Haranda Misra, which has been amazing as well. And then there's myself, and I've just worked with my husband basically to develop the AMC. So, we let this baby has been born. Basically, we hand it over to all the regulated entities to actually deliver on its mission.
Right, that must feel very good at this point after 2 years. I can imagine.
There's a lot of water under the bridge in that time, and a lot of sleepless nights, and in that, But my goal, look, to be fair, even though it has been difficult, and Andrew and I, Andrew Wolfson from Orpheus Capital and I, we often talk about this, and Emil and Morn, who is the strategy manager and product manager. We've talked about this. Whilst it has been difficult, it's been a good journey, because we also know that we have jumped through every hoop to address compliance, to make sure that everybody understands, what we've had to do. And are there some things that I would still have liked to have changed about the AMC? Yes, but we also understand that until these new asset classes are understood and there's greater, confidence in them, it'll be an evolving journey. There's some, certain things that would have been nice to be able to do, we couldn't do because we couldn't get them through compliance. Not that there's anything wrong with them. It's just the traditional structures don't necessarily match innovation. But I think the fact that we've had a 2-year journey to get it through and get a Swiss issuance and get every stakeholder regulated and licensed is testament to the quality of the product. And of course, my goal, which is to shift institutional capital without obstruction.
And I'm assuming, or I suppose we can assume, that going forward, this should get easier, right?
Oh, yes.
Once people have seen it, and you already said you're doing a second one already. Hopefully, this will become more established in a sense.
Yeah, I think we have to demonstrate. It's like all things. It's the same conversation we just had about the crypto assets. I often talk about an innovation curve. And if you're talking crypto assets and you're now looking climate and carbon credits, I would say that it's a profoundly fast innovation curve, more than we've had in other asset classes. I would say in sort of 4 to 5 years, we've sort of gone right to the top, slid partway down, gone back up again, and now we're on that adoption curve for climate. And so you're right, as technologies and these financial tools do drive investor confidence, and there's greater understanding of these new asset classes, and how I'm going to say it's almost like a blended finance model, traditional tools, but new asset classes. As the potentials of these are understood and investors are comfortable, it will get easier. Our second AMC will be much easier. Obviously, it'll only take us weeks because the structure is identical. It's just the investment base is going to change slightly, obviously be focused on blue. But it will get easier. And costs get lower each time as well, because it's a shorter time frame for development. We can develop AMCs that are very specific to a client, that might have a very specific asset class and project methodology involved. So it will get quicker, but I think the rigor and the degree of difficulty that we've had has been a bonus, and it's been a blessing, really, even though it has been a long journey to get here.
I guess somebody has to be first, right?
True, they do.
Over the wall. Yeah. Okay. So you talked about investors. Why don't we go there? Who are you targeting on the investment side? And if I showed up as your ideal investor, what's your pitch?
Look, my ideal investor is, we certainly realize that institutional capital and professional investors are seeking a couple of things. They're seeking a frictionless entry point. They don't want difficulty, and they don't want risk. They want credible exposure to a high growth asset class that's uncorrelated. It's an uncorrelated asset class, so it's a great diversified portfolio. But I think they're also wanting exposure to participation in the growth opportunities, which I believe are actually at the very, very beginning. We all predict are at the very, very beginning of a massive growth curve. Certainly tougher mandatory climate and greenhouse gas emissions frameworks, and they're growing at a drastically fast rate across the world, are our friend. So in terms of the type of investor, I understand there's going to be a whole range of motivations as to why people invest. They're not all going to be driven by climate. And for me, it doesn't matter. My goal is to get that capital from investors such as institutional capital markets, such as pension funds, the big asset managers, all the banks, the financial institutions that currently can't have a mandate or have a mandate, but it doesn't fit into climate assets. So they're my goal. Big tranches, scalable capital into the AMC, and ultimately that delivers, because we actually go out and buy the assets from the projects, that delivers liquidity into the market and into the development world. So for me, it is very much institutional, large tranche institutional pension funds, asset funds, and professional investors. To a degree, some of the big family offices that are looking to engage as well in climate but have been excluded. In fact, we've already had some feedback that the pension funds are feeling that they are being squeezed out of climate because their regulatory market doesn't permit them to engage, and they come under a lot of criticism. But I think the other side for me, and I do say this quite regularly, is I'm also looking for the big emitters and the big companies that are wanting to shift and invest into sustainability. But I say this, I want to shift climate from the profit and loss sheet to the balance sheet. I want to turn this from being a cost to an investment, where it is recognised that climate can return a financial gain. Yes, it has a socioeconomic gain, and it certainly has a community gain, and it has the benefit of impact. But there is an ROI, and it's a good ROI, and that's the conversation. Take the emotion out of this and turn it into a financial product. So for me, it's certainly the big corporate emitters that have got a need and a desire to want to invest and make money from climate, so that we can get more liquidity back into the market, but also the big institutional investors.
Okay. So assuming I'm the CIO of a pension fund and you've got my attention, I'm interested, I'm going to ask you, where exactly is this ROI coming from? How are you going to make me money?
Yeah, growth of the asset. It's like all things. Growth of the asset. And it's not that difficult. I mean, we know that, and these are the well-known names. So we're looking at, the Bloombergs, the Morgan Stanleys, the MSCIs, the, EYs, McKinsey's, BCGs, all of them, are predicting, for example, that a ton of carbon, so the cost of a carbon credit, is going to surge to probably somewhere around about the 150 to 160 euro per ton by 2030. That's 4 years away, right? Currently, we're paying, for, depending on the methodology, it's anywhere between sort of $7 to $20. So that's a remarkable growth. Now, you're also looking, if you want to talk in percentages, the EY Net Zero Centre have given some forecasts, and that's only one, and there's a myriad of forecasts that are out there, that we'll get a rise of 9.5% to 15% year on year between now and 2035, and then beyond that, 4 to 6% a year. So, you start to talk these sorts of growth figures. When I was in Monaco last week and we were talking the blue economy, for example, these are premium priced carbon assets. And at the moment, most of the big emitters won't use those assets to offset their emissions because they're expensive. But if you put them into an AMC, it's not the cost of the carbon asset that's relevant. It's the growth of the asset. And so we overcome that obstruction too, where you've got high-priced assets that are not being attractive and are not being utilised by emitters because of the cost, can go into an AMC, and we can get growths of, these massive growths that we're talking about. I mean, blue carbon, there's a whole new tranche of assets that were released at UNOC 25 in Nice from the first Mediterranean blue, and they're sitting at $70 a tonne. That's not likely to be used by the emitters, but they are and have the potential for massive growth. We're looking at, a market growth, for example, that's sitting at the moment at around about 950 billion USD. And by 2030, 2035, we're looking at $16.4 trillion market. That's a big growth.
That's huge.
And we're at the very beginning of that. Now,
Okay.
there's lots of arguments out there that people will say, there's a lot of negativity around, Trump and the issues in the States. It's not real, because we know that there's, since 2000, for example, there's been an astonishing 650% growth in the number of climate action frameworks. There is no slowing down, and that was quite evident coming out of Monaco and Nice last week, just in the blue economy alone. And so taking the emotion out of this conversation and start talking about carbon as a commodity and a growth asset is very different than having a climate conversation about the impact and all of those sorts of discussions. And so we need to sort of separate the two. It's a growth asset. Simple.
Okay, but that said, still, I mean, at least if somebody maybe like myself from the outside, you come in and you say, well, you do have this pushback in the U.S. I keep reading about, ESG is ancient history already, or fading away. There, a lot of climate denial or less interest in climate projects. So, are you really saying that's really just surface noise that doesn't mean anything, or is the market more problematic than you might be thinking?
I think it's a lot of surface noise and white noise, and it doesn't.
Okay.
It detracts from the reality. If I use, again, I like to use pragmatic examples. For example, so DP World was one of the entities that was there at the Blue Economy Finance Forum, and they were the first to raise a blue bond, and they did it in partnership with Credit Agricole and a number of other entities. And they raised $7 billion, and that was so that they could actually build new shipping vessels that come out dual fueled, obviously, and green shipping vessels, because there was a huge presence of maritime shipping, logistics, and insurers at the Blue Economy Finance Forum. There's no slowing down. It's not just because it's climate. It makes good financial sense for them to cut costs and produce more efficient vessels and more efficient ways of using, money that they raise to do better, both for the climate and for the businesses themselves. So, there's just we're about to do some work, for example, with California,
Mm-hmm.
and because they have a massive challenge around wildfires, and the use of carbon and climate finance will finance the solutions that they have to overcome those problems. And the drivers are the insurance companies. I mean, it's a massive cost to insurance companies. So for them to invest into climate and put their money into a solution that ultimately saves them money is a real driver. I mean, you've got new frameworks, being delivered out every day. I mean, you've got the United Kingdom sustainability disclosure requirements. I've just got another invitation to another event in London where the High Commission in London wants to start to engage with projects in Africa because they recognise the value and the growth of investing into these projects, not just from a climate perspective, but from a revenue perspective. The UAE and Dubai, you would have seen yesterday potentially that the VCM market out of Saudi, headed up by Riyam El Ghizi, and NEOM and Inawa have just entered an agreement for 30 million tonnes of carbon over the next decade. These are big transactions. And, I always like to throw this one in. If anybody thinks it's going away, if we hoovered up every single carbon asset on this planet, and good, bad, or ugly, doesn't matter the quality, just every single one that's available, it would offset Saudi's emissions for 8 days. So please don't think that there's there's some reality. This is the point. This is the opportunity. So there is a lot of white noise. And so even though we're hearing that, out of the US, what we are hearing and seeing is a lot of the asset managers and the funds are now looking for a home for money outside the States in other areas. So sometimes you could say it's a bit of a blessing in disguise, but it is certainly not slowing down. The amount of effort and money, and again, I just the blue side alone, let alone anything else, it is quite extraordinary, the opportunity that's out there. And it's not just about making the planet a better place, it's about making an ROI, a return.
Great. So maybe actually we can go back there because before, as we got into the market discussion, you were actually talking about the AMC, and I wanted to get back to the term sheet where you have these 4 strategies. And I'd like to unpack those because those are quite interesting. So these are basically the investment strategies of the AMC, right?
Yeah. So in terms of the type of strategy, obviously it is, the AMC is designed to deliver on a performance for our investors. So having an asset, a balanced asset class, if you like, where there will be a proportion of existing credits, we call them spot credits, if you like, that will deliver, their existing credits that are out there that are already produced and verified. That will form part of our tranche, and we're also going to split it between nature-based and technology-based. Okay. We'll also have...
what does that mean?
So nature-based, it's a methodologies, basically. So very broadly, to simplify this discussion down for investors, is that there are credits that are produced in a methodology that fit into what we call a class of nature-based. So basically, they're driven by nature rather than technology driving the production of the asset.
Okay, I see. Yeah.
And the second class of methodologies to produce the carbon assets are technology-based. So it's using technology, e.g. direct air capture and various other technologies. They're registered methodologies to produce a carbon asset that either avoids or prohibits the emissions of carbon. So again, we've balanced our asset ratio between nature-based and technology-based. We're not methodology. We're methodology agnostic. Mm-hmm. We're more focused on the attributes of the asset rather than the actual methodology, and of course the attributes of the asset around its growth pattern. So we've looked at various different strategies. So there is a 4-part one. So first of all, there's our spot credits of existing credits that are already registered in the market. We'll also have a proportion of what we would call forward contracts and emissions reduction program agreements. So they're forward agreements where you might have a project that is verified and registered but not actually producing assets yet. So we'll take a long-term offtake agreement from those projects that are verified. And we will align largely to award-winning projects where there's incredible credibility around those projects, e.g., for example, the Ghana Green Guard program, of which I'm involved with. So that's a program that's going to produce well over 305 billion credits over the next 25 years, but it is a partnership directly between the Environmental Protection Authority and the project developer. So it has huge credibility and massive credibility, trust and confidence already built into the program. So we'll take long-term agreements from those projects, and generally they're assets that are issued at a discounted rate.
That was my question. Do you get a better rate when you come in early?
Yes. As an early adopter, so we will go in and we'll say we'll take a discounted tranche of those assets. We might get those assets at 50 to 60% discounted on current value rates. We'll put those assets in. They're all agreed. They're all legal agreements and forward agreements. We know the attributes. We know they've got full source to sale DMVR provenance, so digital provenance of the assets. They've already gone through carbon feasibilities and so forth. So it's a formal forward agreement, just like you would have a forward contract for any other commodity. But because they're discounted, it means that when they're issued, the assets are actually issued and they go to market in 2 years' time or 2.5 to 3 years' time. We've got incredible growth that we're driving and performance into the AMC. We'll also be very heavily focused, our third tranche, on the Article 6 agreements, so the internationally transferable mitigation outcomes, or ITMOs as we call them. They're all just carbon credits. They're just being sold under different mechanisms. So we will take a tranche of Article 6 ITMO agreements, which are sovereign to sovereign agreements, the most valuable of all our assets, and direct sovereign projects. So we'll have assets that'll be Article 6 aligned, and also special mechanisms such as Corsair, which are the credits that are used to offset emissions for the airline industry. Now, there's the smarts to that because it's regulatory driven. There is a shortage of those assets. They're growing in value. And the AMC is not about trying to fulfill all the emissions requirements. It's about growth for our investors. So if we pick assets that have the greatest regulatory demand and are in short supply, we get the greatest, growth. But we also have the best exposure, to credibility and trusted assets in terms of de-risking for the investment, strategy. And the fourth one is, in essence, taking rights issuance, which means rather than it's like a forward contract, but it's in essence a rights issuance program where we get very deeply discounted rights, and generally those rights issuance raise capital for seed capital for projects. So we take the rights for the credits and we put those into the AMC, and they have probably the greatest growth of all. Now, again, it's very carefully curated and selected. They're award-winning projects with high credibility. They're blue projects. They're projects such as the Ghana project. We've got stuff coming up in Cook Islands and various others. And they're generally sovereign-backed programs as well. But because the assets themselves are deeply discounted, within the 2 to 3 years from the time we put them into the AMC to the time they have liquidity, and in fact, we can even sell the rights if we needed to produce liquidity, they have a very high growth. Higher growth than any of the existing assets that are out there. So we've looked at the four big areas, if you like, in the market, but also the four areas where we can de-risk by ensuring that we're engaging with sovereigns, with assets and registries and projects that have the highest degree of credibility in terms of trust and confidence. And of course, that brings in the conversation around blockchain. So for us, we've also built in processes, and we'll talk about that, I suppose, in a minute, but in terms of some of our risk processes around our ratings of our assets and so forth. So, yeah.
Just listening to you talk, what this is reminding me a lot of is other clients and projects of ours, that there's a kind of similarity. So I had a podcast on a wine AMC, and one of my first podcasts was a fine art, and it boiled down in one sense to the fact that you had the strategy manager was kind of an insider in the market and understood the market, right? And had this access to early stage opportunities, whether it's the Bordeaux Primeurs when they're first coming out, or this sort of art access. But basically, it's his ability to sort of know what you're getting and get it at a discount, which can be a huge value driver, right?
Look, absolutely. And I think the challenge with it is it's still got to be de-risked, and that's really the beauty of the AMC. Is you are absolutely correct in terms of the asset base, and often when I've been having this discussion, with Gen 2 and the directors of our SBC, I used to say to them, just imagine a carbon credit's a brick. Forget that it's it's a brick, right?
Mm-hmm.
And if I have a whole warehouse full of bricks, I still have a process of de-risking. There's a process of de-risking the brick, like where it's been made and produced, and whether it's real and the quality of it and all of those sorts of things. But there's also the second part, and that's the risk mechanism of the financial tool, and that's always really difficult to do with these new asset classes, because people naturally dive straight into the asset rather than the actual process and the tool. So that's been part of the journey, and you're absolutely right. If you're talking, fine wine or diamonds or any of those sorts of things, generally people ask about the asset before they ask about the process. But the difficulty is that for institutional capital markets, they ask about the process first. So if the process doesn't work, they're not interested in the asset. And so that's this whole sort of balance here. It's a multi-strategy where we've had to balance within the AMC, what we call bankable assets, which is our liquidity, the traditional financial tools, and what we call non-bankable assets, because you can't put a carbon credit in a bank. You can't just sit it in a bank account. It sits somewhere differently. And so I've had to get over the challenge of that de-risking of the process and the tool to make sure that all the components of the transaction are frictionless. They meet risk reduction strategies. They meet all the regulatory requirements, and then we can get into having a conversation about the asset. But again, I've tried to, even in that conversation, not take people down a rabbit hole of carbon credits and all the bad things about carbon credits. It's about, again, I've tried to keep them very, very focused on the strategy and the process of how assets are produced and how we're using those attributes within the AMC. So we've got a very clear line of sight of what assets, and we call them investment grade carbon assets. And I've specifically used that term, not just carbon credit. And so our assets have different attributes, and those attributes are designed to de-risk the asset for investors. And so it's even the languaging is so important in this discussion. So don't take people down a rabbit hole you'll never get yourself out of. I've even said that to our capital markets team, is don't say this, say this, because if you get down that rabbit hole, you'll never get yourself out of the rabbit hole. Keep it where this conversation needs to be. It's a financial tool. It's got a return on investment. It's de-risk for investors. We've got to focus on it, and it's all a languaging. So you'll see a lot of the languaging in our documentation has been de-emotionalized, if you like. I'm not sure that's a word, but I just created it.
I'll take it. I like it.
Yeah.
Lisa, this is fantastic. We've been talking 47 minutes already.
Wow.
It goes quickly. Anything that we've missed?
Look, again, I'm going to go back, I suppose, to the technology, and I'm going to talk about a particular term, and I talk about source to sale. So the process, I think, in terms of, if you look at the AMC, in terms of, the strategy managers, the custodians, the digital custodians, and so forth. But I think the digital custodian is super important in this conversation in terms of transparency of the asset, because these new asset class, or this new asset class that we've created the investment product for, has to sit somewhere, and it sits on our digital custodian, which is SECDEX, and that is all blockchain enabled. And I think that overcomes some of the challenges that we've talked about in terms of the things that we have been questioned on. So we need to mitigate the risks of greenwashing. We need to mitigate the risks of double counting of carbon assets. We have to have a very clear line of absolute unparalleled transparency and accountability for audit trails. for the assets. So when we buy and sell, and when the assets are purchased, etc. So I can't underestimate the value and the importance of the technology. So, as I said, if you imagine all these assets coming from various different sources, we digitize those if they're not digitized, and we digitize the attributes of those assets, and we anchor them to a blockchain. And they sit in one repository and they never leave it. If they are offset, in other words, they are offset against emissions, or we sell them, there's a direct pathway. Everybody can see. You can see a little hash code, and you can actually hop in and physically see 100% the movement of that asset and where it is and where it's gone, what its attributes are, etc. So there's a very clear line of sight for investors to see that their asset is well cared for, well looked after, and we, of course, can't be questioned on any of those, challenges. So I think the use of that is critically important, and understanding the need for these digital custodians. So I think that's one point. So I call that source to sale. There's lots of people that will talk about the use of the technology at the project level, but that source to sale, from the source of where we get the assets to the sale to the investment point, it has to be that 100% continuous, provenance of the asset. So can't underestimate the importance of that. So I think that's super important. And I think the other thing is, and I do talk about this, it's the attributes of the asset where we talk about investment grade. And so I've coined that phrase, investment grade carbon assets, and a few others have picked it up since that and sort of tried to run with it. But we do something very different. We acquire the assets on investment flowing through the AMC, and then we do something ex ante to those assets to create an investment grade asset. And that is again around making sure that I've de-risked, whether it's perception or otherwise, it makes no difference. I've de-risked that for our investor to ensure that we've got ex-ante ratings. We use, B0 and Silvera and Calix Global. So ex-ante ratings of the assets. No asset goes in unless it's had an ex-ante rating. And we're targeting A+. So we're taking the cream of the crop. There's plenty of cream out there to put in there. I'm not trying to boil the ocean. I'm not trying to solve everyone's problems, but I'm trying to get scalable capital. And to do that, I've got to make sure that space is de-risked. So ex-ante ratings, insurance wrapping, full source to sale provenance of the assets. These are different attributes. They're not just the same attributes. They're different layers of attributes that we've given to the investment asset. It's almost like getting a piece of gold and polishing it up. When you see a piece of gold out of the ground, it's dull and it might be gold, but it doesn't look like what we get at the other end. And so we've literally taken these assets and done something very different to them to de-risk that space. And that's why I think it's key that we do talk in that language, that the AMC really for us, it sort of bridges regulated financial infrastructure, and yet at the same time we've combined specialist carbon market access and enabling tools such as ex-ante ratings and insurance wrapping and so forth. And that delivers on the needs and demands that we're being expected to address from the investor's point of view. And that was very, very clear when we were, again, when I was in Monaco and Nice last week. There was terms in there, and these were some of the terms that we use. We need a virtuous cycle of investment. So in other words, it doesn't really matter what the motivation is. It is still a virtuous cycle because it gets us the capital and liquidity where it needed to go. But for that to happen, there needs to be greater support and education and tools given to the investor that haven't existed till now. And when, I turned up and started talking about this, they're going, wow, we never thought about this. There's been lots of discussions around debt swaps and bonds and funds and so forth. But what became evident is that when you talk to those who need the capital, and I'm going to talk about the small island nations, for example, they said none of that money is actually available to them. They're all tools that are not available to them. And I spoke to the head of the Small Island Nations Alliance, and they collectively, for example, manage 73% of the ocean's marine parks. So it's a huge, small islands, but they have a huge importance in our economy. And they said the current money that's sitting in all these funds and bonds and so forth is not available to them. Most importantly, they also can't get seed and Series A capital to get some of the projects going. But if I talk about the virtuous cycle of the socioeconomic impact of the AMC, I can take rights issuance from those projects. I can deposit those into the AMC. Investors invest into those, and I've provided the liquidity through a different tool back to those projects, but I've also given investors the greatest ability of growth. And so that really was this whole virtuous cycle. But the virtuous cycle can only happen if I've got technology and trust and confidence in both the process of the AMC and also the process and curation of the assets.
And once you have that, in essence, if I understand correctly, the AMC is through these means investing in these projects.
Correct. Yes, we're buying the assets. It's almost like, again, direct project investment comes at a higher risk level. It's whether, again, I'm going to say whether it's perceived or not. So, the Standard Charters, the Credit Agricoles, the big banks and so forth just don't have the mandate to directly invest into a project. Many of them don't have a balance sheet, to justify how these loans and other things might be paid back. They just don't have the mandate to do it. So if we can find in essence, a buyer, and in this case, it's the investor and the AMC, we are, and in fact, the buyer of the asset, we've given liquidity back to those projects without having to have VC or various other tools that aren't available to them. So this virtuous circle of investment tools means we overcome the challenge of direct project risk, direct investment into project and the risk associated with that, because we're actually just buying the asset, and we only buy the assets that have a certain attribute attached to them. So we overcome that as an obstruction as well.
That's fantastic. It's really nice to hear this sort of pragmatic approaches that can actually work.
Yeah. And look, we're targeting sovereign investment funds as well. So, we're looking at the Temasek out of Singapore and, some of the big sovereign funds. We need that money makes the world go round. Big infrastructure development projects for renewable energies and for different energy sources and whole range of things are required, but it all takes capital, and it will require a blend of public and private finance. And there hasn't been enough access for private investment to engage the same as sovereign investment has been able to engage in, for example, IPMO agreements and transactions that way. So there's a blended finance approach. I mean, the Walton family office was there. Marcus heads that, the owners of Walmart.
Yeah.
And that family office has invested in one debt swap alone. They invested $700 million. They've been engaged in a number of the blue bonds and other strategies that are out there. So the family offices are also saying these are new, secure investment opportunities with the right tools for them to use their funds in a better way. Socioeconomic impact, yes, but again, grow revenue. So, I think we're seeing a real shift in the markets, and these sorts of tools are just going to be useful for us to make that movement of capital that's locked and move it to where it needs to go.
That's fantastic. Lisa, you launched a couple weeks ago, I think, not so long ago. Last question is, what's next? What are you guys up to now, and where's this going?
Yeah, what's next? Our primary subscription for our first 500 million is set for 30 September for our AMC, the first AMC, and it's a balanced fund. So it's balanced across all different types of methodologies with, obviously, as I said, nature-based and technology-based. And again, we're not we're methodology agnostic. It's more about attributes of being award-winning and the best projects we can in the world. The second step we're already up to within the next couple of weeks will be our blue economy AMC, 100% focused on blue credits. And we've got some exciting partnerships with some of the world's leading projects, and we'll actually have a very procured set of assets that aligns beautifully to those, and we'll be certainly targeting the momentum from UNOC and obviously the Blue Economy Finance Forum, where there was a huge appetite for investment. So that's the next part. And I suppose, thirdly, we cannot look past the fact that the Middle East is certainly looking for investment tools. And of course, that means that we'll go down the Sharia compliant pathway as well.
Okay. Yeah, sure.
AMC.
Sure, that makes sense.
Not that we're not, it's just that you have to have, there's a few other little hoops that you've got to jump through for that component. But for us, it's certainly fill our primary issuance on this one. The second primary issuance is the blue will open with the same 500 million. It's open. They're both open-ended, so they're open-ended products, so they always have the ability for more, of course, and then look to probably as well. I think there'll be some specific entities that are looking to create a structure for investment directly into a particular type or a particular country or a particular tranche of investment.
Okay, so you'd build a
we'll do a structure just for them. Yeah,
a structure just for them. Yeah.
Yeah. Okay. I mean, I'm working with a couple of the big auto manufacturers out of Europe who have an incredible strategy around sustainability, and they're looking to put sustainability on their balance sheet. But they have, very specific strategy mandates, and it might be, for example, that they want to engage with just a continent, for example, or it might be a particular type of methodology, etc. And that's the beauty of having created such a regulated framework, is that we can change the asset base without changing the process. It's just the asset that we change and the focus that we change. So it becomes a replicatable event for that. And of course, as we move forward, there are some things that we would like to think about in terms of streamlining some of the, as I said, some of the improvements that I'd like to be able to make, but it only happens once our directors of our SBC are comfortable with seeing investment monies flow through and making sure that the custodian pathways work and everything works really well. We'd still like to improve the experience for the investor where they pay reduced fees by allowing investors, for example, to offset their carbon emissions with a redemption of their assets rather than it just being for cash. So that would sort of that's a target of mine. And that just requires the SBC directors and Gen 2 to be more comfortable with the new asset classes, I suppose. But ultimately, that would be ideal, because then we would have the best of both worlds. We would have a redemption for cash, and we'd also have a redemption for an offset, a retirement certificate as well. And that would mean that investors can certainly hedge the cost of their emissions by investing into the AMC. They still can. There'll be emitters out there that are wanting to hedge the future cost of carbon by investing into an AMC and revenue generating. But ideally, we'd like to be able to do that within the AMC as well.
Well, Lisa, I'd like to wish you guys all the luck with that. I really hope it does work out and that things do get easier. And I'd like to invite you back in a year, maybe, to check in and see how it's all gone. But look, this is very exciting stuff. It's very important stuff. And as an old blockchain guy and as just an old guy, it's nice to see things moving to put money where it belongs, and do it in a way that also makes investment sense. I mean, that's really the only kind of driver I think that's going to actually make a difference. So with that, I want to say thanks a lot. We've been here at it for more than an hour, which is fantastic, and it's been a great talk. Thank you.
Thanks, Tom. And just for any investors, obviously, that are listening, please reach out to our distribution manager, which is Shire Capital, or reach out to me and I can put you in touch with those, because clearly, because it's regulated, I can't tell you what the ISIN is and I can't do that on here, but we can certainly put you in touch with our distribution manager for that. So
I'll be more than happy to put all the contact details into the show notes,
thanks.
and you can do that. All right.
Thanks so much, Tom.
Thanks very much.